Good to see you. You look so worried. Is everything all right? I'm having serious issues in my company. Balancing the interest of my company's many stakeholders like shareholders, management, customers, financiers, government, and community is giving us a problem. That has to do with corporate governance. Exactly. Then you need to get in touch with ICSAN. ICSAN? Yeah, Institute of Chartered Secretaries and Administrators of Nigeria. ICSAN. They provide you with seasoned and top-ranking professionals trained to uphold the standards of corporate governance and efficient operations. You can also get in touch with ICSAN if you want to become a Chartered Secretary and Administrator. Contact ICSAN by visiting the website www.icsan.org or call 009 06 601 69. ICSAN, the hub of governance professionals.
A very good morning to you. Good morning. Welcome to Corporate Governance Platform on Echo 89.7 FM. I am Olabisi Omidiri. Corporate Governance Platform is a program sponsored by the Institute of Chartered Secretaries and Administrators of Nigeria. Today on the show, we're looking at the role of external auditors and integrity of corporate financial reporting. And our guest is Sachuma Oswebi, FCIS, a legal practitioner, company secretary, Orange Line Limited. Good morning, sir.
Good morning.
Welcome to the show.
Good morning, listeners.
All right. Our dear listener, our focus, like I did say, is the role of external auditors on integrity of corporate financial reporting. Sir Oswebi, let me come to you. What are the roles and functions of external auditors?
Basically, the role of external auditors is to provide independent opinion of a fair and view of the expense of accounts of a company. So they are called external auditors because, first of all, they are engaged elsewhere outside the company, to first of all clean up the mess of the internal auditors that they call a police in the corporate world.
Okay, so
yes,
moving on, what is the link between external audit functions and risk management?
Well, it is interwoven. Because the external auditors, their role basically is to mitigate the risk of the company, because they are the ones to detect the fraud and all that, They are
the watchdog.
The watchdog, like I say, external police of the company. So now the code recommends that the audit risk management committee, should be made up of members from the audit committee and the other, do you understand? Because they know that it cannot isolate the risk committee from audit committee. In some organizations, it's interwoven. That's risk audit committee is also merged with audit committee. For when they are separated, there must be, a member from audit committee like who is a member of the risk committee, and vice versa.
So how does external auditors ensure the integrity of the financial statements?
It's simple: to be independent of the company. The external, so that what external means, they're independent. They're just engaged, to look at the books of the company. So whatever is being covered by the management of the company, they are able to expose or detect. So they're professionals, so they need to act professionally.
Still on Corporate Governance Platform on Echo 89.7 FM, looking at the role of external auditors on integrity of corporate financial reporting. Moving on, sir, What is the meaning of true and fair view of the financial statements and its relevance in parlance of corporate governance?
Well, true and fair view of financial statements means that the executors will look at the books of the company, and they're presenting the true and fair, that's in their opinion, this is right. They may not be 100% correct, but to a large extent, to assure shareholders that this is what it is. That is what true and fair. It does not mean conclusive. Because most times people cook up stories and they cook up the books and all that. But a professional external auditor will just say, okay, yes, this is what it is, to assure the shareholders.
So the code provides that the recommendation for the appointment, reappointment, or removal of an external auditor should be made by the committee responsible for audit to the board. Why is this provision important in the governance context?
Well, so in the past, we had issue of one man, his wife and children being directors of a company. So at that point, they also appoint their in-law as an auditor. But the code came up and I said, wow, audit is a vital corporate governance. So now there's usually an audit committee in the board. That committee is made up of professionals who have financial accounting knowledge, who have integrity and all that. So now even the MD of say SSB Bank could be an engineer. But the audit committee is made up of professionals who are knowledgeable in accounting and financial matters, that they want to advise the board. So that's okay. XYZ audit firm is capable to handle this. If it's left to the board, they just appoint their brothers and sisters and relatives. So the committee, have to look at so many entries or this. Look at it and say, we have looked at all the people who represent XYZ audit firm is suitable for this job. We give it to them, and they now oversight functions on them.
So, what is the rationale behind the code recommendation that external audit firms may be retained for no longer than 10 years continuously? External audit firms disengaged after 10 years continuous service may not be considered for reappointment until 7 years after the disengagement.
Wow, in the wisdom of the drafters of the code, because when you allow, first of all, just for instance, an audit firm to stay longer than 10 years, they will perpetuate themselves in the company. They will now begin to cover the deeds of management, just like the Roman Empire, and become part of management. So after 10 years, you step aside, let another firm come, and the new firm is likely to uncover what you covered. Do you understand? So now, after 10 years, you go away, and after 10 years, when you come back, you may not come back, except you were diligent and sincere. In the last 10 years, you served the company.
Amazing.
So now when you allow a company to stay more than 10 years, that company, that audit firm becomes part of the company. So now if the management wants to be fraudulent, the audit firm will cover the fraud. After 10 years, walk away, let someone else try. So the more the merrier.
Right. Going by what you just said, why are measures like the restriction in the provision of non-audit services and rotation of the audit firms as provided in the code necessary?
Wow. Audit services, the person financial. But in some instances, the board through the audit committee, approves non-audit services. But that is now carried out within what they call restrictions from the board, so they don't go overboard or now begin to review their this is in line with international standards. Basically, an audit firm, but most times, just like an audit firm may, apart from look at the financial statements and all that, begin to profess tax clearance and risk portfolio, but it has to be within the approval of the board, or else they will go overboard and now begin to do what they were not asked to do, and now begin to do self review and order.
All right, and still on corporate governance platform on Equator 9.7, we've been speaking with Chuma Oswebi, FCIS, Legal Practitioner, Company Secretary, Orange Line Limited. Moving on now to Mr. Kayode Ketefe, FCIS, the Head of Research for ICSAN, with his own information. Good morning, sir.
Good morning, BC. This announcement is on the training coming up tomorrow in the ICSAN virtual training series. The topic of the training is Understanding Enterprise Risk Management Framework, a corporate governance tool. The training, as I said, is coming up tomorrow, Thursday, March 18, 2021 at 10 a.m. prompt. It's going to be held by virtual method. The training is meant for top executives saddled with risk-related responsibilities, and specifically, it will benefit managing directors, chief financial officers, corporate secretaries, senior accountants, internal and external auditors, chief risk officers, Security and Exchange Commissions officials, NSC, Nigeria Stock Exchange officials, and other supervisory and regulatory authorities. By attending this course, participants will gain knowledge, competencies, and skills to gain a better understanding of the role of company secretaries, director and senior executive overseeing them, and to understand and leverage on risk management. They will be able to apply scalable templates for risk management plans, risk register and risk assessment matrices for initiative and function of core risk, area, credit, market, and operation matters. They will also understand these risk exposures in relation to the company's overall core business operations. And furthermore, they will gain a better understanding of the primary questions to ask risk management heads during the oversight process. We all know risk management is a cardinal responsibility of the board of directors, while actual execution is often delegated to audit or risk and governance committee. A number of governance professionals also have roles to play. So this is a course that should appeal to everyone in governance sector. The participation fee as follows. For members of the institute, 45,000 naira. For non-members, 50,000 naira. You can still register for this useful training that is coming up tomorrow. For more information on this training, please call Oyeniyi on this number, 080-6152-4764. Oyeniyi on 080-6152-4764. Thank you very much.
All right, and thank you so very much, Kayode Ketefe, FCIS, Head of Research. Now to the Senior Manager Operations, Akumefola Ojiji, ACIS. What do you have for us this morning?
Good morning, BC. Thank you very much. The Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, invites all our members and listeners to the Rivers State 2021 Mandatory Continuing Professional Education, known as MCP, scheduled for Tuesday, 30th March 2021 at the Nigerian Bar Association Port Harcourt branch, opposite Port Harcourt City Local Government, Bank Road, Rivers State. The time of this MCP is 10 a.m. We have 3 speakers lined up for that day. The first speaker on the topic is Dr. Emeka Onachukwu, who is the founder, lead consultant, Develop You, and the former president of the Port Harcourt Chamber of Commerce, Industry, Mines and Agriculture, and he'll be speaking on the topic, investment and financial opportunities in the current political and socio-economic climate. The second speaker is Dr. Adibola Ogumba, who is the company secretary / legal advisor of Alcon Construction Nigeria Limited, and she'll be speaking on the topic statutory regulations and compliance issues today, practicability and challenges. The last but not least speaker is Dr. Pere Owe Subai, who is a senior lecturer of company law at Niger Delta University, and he'll be speaking on the topic CAMA 2020 implications for company secretaryship and boardroom affairs. The fee for this MCP is as follows: for member 35, student 30, non-member 40, and those attending virtually will pay 20,000. For those attending physically, they have a 10% discount between now and Friday, 19th of March 2021. For more information, please contact Ojiji on 080-23-783-043. Again, 080-23-783-043. We look forward to your attendance as it promises to be richly rewarding. Thank you.
All right, and thank you so very much, Akume Fola Ojiji, ACIS, Senior Manager Operations, ICSAN. Dear listener, we have come to the end of today's edition of Corporate Governance Platform on Equator 9.7 FM. Our focus today, role of external auditors on integrity of corporate financial reporting. And our guest, Sachuma Oswebi, FCIS, legal practitioner, company secretary, Orange Line Limited. Thank you, sir, for coming on the show.
Thank you for having me.
All right. Thanks also to Mr. Kayode Ketefe, FCIS Head of Research.
It's my pleasure to be here.
Do join us same time next week, Wednesday morning at 10:30 at 15 minutes after 10 on Corporate Governance Platform, Equator 9.7 FM. My name is Olabisi Omidiri. Good morning.